Imagine waking up one morning to find out that the currency in your wallet, the dollars you've saved for years, suddenly isn't worth what it used to be. That might sound like something out of a movie, but what if I told you that behind closed doors, one of the world's superpowers has been quietly making moves that could shake the very foundation of the American dollar? China has been selling off U.S. Treasuries at a pace that's raising eyebrows across Wall Street. And in 2026, this trend has accelerated in ways most people aren't even aware of. The big question everyone's whispering about is this: is the dollar finally losing its shield? Stick around, because what I'm about to share might just change the way you think about money, power, and the future of the global economy. Before we dive deeper into this financial mystery, if you're enjoying this content and want to stay updated on what's really happening in the world of economics and geopolitics, go ahead and hit that like button and subscribe to the channel. Trust me, you won't want to miss what's coming next. So let's rewind a bit. For decades, the US dollar has been the king of currencies. It's been the world's reserve currency, meaning countries around the globe hold dollars and US Treasury bonds as a safe way to store their wealth. Think of it like this: if the global economy were a giant game of Monopoly, the US dollar would be the banker, the one everyone trusts to keep the game fair and stable. But what happens when the banker's biggest customer starts cashing out their chips? That's essentially what China has been doing, and it's been happening quietly, away from the headlines that dominate your newsfeed. China has been one of the largest foreign holders of U.S. Treasury securities for years. At its peak, China held over $1 trillion in U.S. Treasuries. When a country buys U.S. Treasuries, they're essentially lending money to the U.S. government. In return, they get paid interest, and they have a safe place to park their massive foreign exchange reserves. It's been a win-win situation for decades. But here's where things get interesting. Starting around 2022, China began reducing its holdings of U.S. Treasuries. Some analysts brushed it off as routine portfolio management. But as we moved into 2026, the selling hasn't stopped. In fact, it's picked up pace. Recent data shows that China's holdings have dropped significantly, and they're now at levels we haven't seen in over a decade. This is a deliberate shift in strategy, and it's raising some serious questions about what China knows that maybe the rest of us don't. Now, you might be wondering, why does this matter to you? Here's the thing. The stability of the US dollar affects everything from the price of gas you pump into your car, to the cost of groceries you buy at the store, to the value of your retirement savings. When major players like China start pulling back, it sends a signal to other countries and investors. It's like watching someone at a party suddenly head for the exit. You start wondering, do they know something I don't? Let's talk about why China might be doing this. First, there's the geopolitical tension between the US and China. Trade wars, technology restrictions, disputes over Taiwan, tensions in the South China Sea, the list goes on. China might be reducing its exposure to U.S. assets as a way to insulate itself from potential economic sanctions or political pressure. By selling off those holdings, China reduces that leverage. Second, there's the issue of diversification. China has been working for years to reduce its dependence on the U.S. dollar. They've been promoting their own currency, the yuan, in international trade. They've been buying gold, lots of it. From China's perspective, having too many eggs in the U.S. Treasury basket is risky. By diversifying, China is essentially hedging its bets, making sure it's not too vulnerable to any single economy or currency. Third, China's own economy has been facing challenges. The real estate sector has been in turmoil, with major developers defaulting on debts. Economic growth has been slowing down. When you need cash to deal with domestic problems, sometimes you have to sell assets, even valuable ones like U.S. Treasuries. But here's where it gets really interesting. When China sells U.S. Treasuries, who's buying them? And what happens to interest rates? If there's less demand for U.S. Treasuries, the price drops and yields go up. Higher yields mean higher interest rates for everything: your mortgage, your car loan, your credit card. So China's selling could have ripple effects throughout the entire U.S. economy. However, the Federal Reserve has tools to manage this. Other countries like Japan and the United Kingdom remain huge holders of U.S. Treasuries. Plus, American institutions like pension funds and insurance companies are major buyers. So while China's selling is significant, it doesn't necessarily mean the sky is falling. But perception matters in financial markets. If other countries start following China's lead, that could create a domino effect. The dollar's status as the world's reserve currency gives the U.S. enormous advantages. Losing that status wouldn't happen overnight, but a gradual erosion is definitely possible. Let's also consider what this means for the average American. If the dollar weakens, imported goods become more expensive. That means higher prices at the store. On the flip side, a weaker dollar can make American exports more competitive. But for most people, the immediate impact would likely be felt in their wallets through higher prices for everyday items. Now, is China the only country doing this? Actually, no. Russia dramatically cut its holdings a few years ago. Saudi Arabia has trimmed its holdings. So China isn't alone, but because China is such a massive player, their moves get the most attention and have the biggest potential impact. Some analysts believe China is preparing for a future where the dollar isn't the dominant currency. They're positioning themselves to be less vulnerable to any single currency or economic system. China has been pushing for more international trade to be conducted in yuan. They've set up currency swap agreements with dozens of countries. They've been promoting the use of yuan in oil transactions, challenging the petrodollar system. But here's the reality check. The US dollar isn't going away anytime soon. Despite all the concerns, the dollar still accounts for the majority of global foreign exchange reserves. It's still the dominant currency for international trade. The US financial markets are the deepest and most liquid in the world. That gives the dollar staying power that's hard to challenge. What we might be seeing is the beginning of a more multipolar financial world. Instead of one dominant currency, we might move toward a system where several currencies play major roles. This transition wouldn't be smooth or quick, but it's a possibility that economists are starting to take seriously. If you've made it this far, drop a comment below and let me know what you think. Do you believe the dollar's dominance is under threat, or is this just another cycle in global economics? And if you haven't already, share this video with someone who needs to understand what's really happening with the global economy. So what should everyday Americans be doing in light of all this? First, don't panic. Financial systems are resilient, and dramatic shifts don't happen overnight. But it is worth thinking about diversification in your own investments. Consider having a mix of assets that can weather different economic scenarios. Second, stay informed. Understanding these trends can help you make better financial decisions. Whether it's where to invest, how to protect your savings, or what to expect for prices and interest rates, knowledge gives you an advantage. Third, remember that what matters most is how you manage your own financial situation. Make sure you have an emergency fund, that you're investing for the long term, and that you're continually building skills and value. The relationship between China and the United States is one of the most important dynamics shaping the 21st century. China's decision to sell U.S. Treasuries is just one piece of this larger puzzle, but it's a significant piece that tells us a lot about where things might be heading. So is the dollar losing its shield? The answer is complicated. The dollar is still incredibly strong and dominant, but it's facing challenges it hasn't faced in generations. Whether this leads to a fundamental reshaping of the global financial system or just a period of adjustment, only time will tell. But one thing is certain. We're living through a pivotal moment in economic history, and understanding what's happening now will help you make sense of what comes next. I want to hear from you. What do you think about China's moves? Are you concerned about the dollar's future? Share your thoughts in the comments section below. And if this video opened your eyes to something you didn't know before, share it with your friends and family. The more people understand these economic shifts, the better prepared we all are for the future. Until next time, stay curious, stay informed, and keep questioning what you hear, because the truth is often more complex and more interesting than the headlines suggest.